Price doesn't move randomly. It moves to where your stop losses are. And that's where 90% of traders actually fail in the market. That's why in this video, I'm going to explain what liquidity really is. I'm going to explain why liquidity is so important, how institutions actually use liquidity to their advantage, and the best times to trade liquidity. I think I said liquidity like 5 times in this intro. So let's get right into the video. Also, as a bonus, I'm going to link my favorite liquidity strategy. That's one more time. At the end of the video. So if you are looking for strategy, definitely stay tuned. So let's get right into the video. Let's do this. In simple terms, liquidity is simply buy side liquidity and sell side liquidity. Now, marking them out, buy side always goes at the highs. So for example, buy side liquidity, this is a high, an obvious high in the market. So we mark it out as a buy side. Same thing goes, sell side liquidity. We can mark it out one over here. We have sell side liquidity. What happens? At the lows, it's a major low. We mark it out. What happens? We sweep it out, and then we have a very strong push higher. Now, same thing goes. Buy side liquidity. What do we have? Once again, market comes up, sweeps the buy side, and what do? Strong rejection lower. Now, over here, this would actually be a better sell side. Let's mark it out. Sell side liquidity, obvious low in the market. You wouldn't mark out a sell side liquidity over here. Why would you mark it out here? It's not an obvious low. This is an obvious low. So sell side liquidity. Now, it's all fun and games, sell side liquidity, sure, but what really is it? Buy side and sell side are simply just terms to say that there are big liquidity pools in the market. There are tons of orders in this area. So that being said, markets always want to go into those areas, generate liquidity, get more power to then push lower. Think of it as a fast food market. There is a bunch of people waiting for the doors to open because they're hungry, right? They say the stores have been closed for a couple days. Now they're all hungry. They want to run in, or it's Black Friday. They want to get their Lululemon, whatever. Lululemon. Anyways, so they all run into the market, and then everyone gets executed. Everyone gets their orders. Market drops because everyone got their order. No one has to stay in the store anymore. So that's a little way you can look at it. So now that you have a clear understanding of what buy side actually is, well, now you can use it to your advantage. You can look for counter trend moves. So for example, we see this buy side. It's an obvious high in the market and we're sweeping it. Now, always mark out buy side, sell side on the 1 hour time frame. Should have mentioned that before. Then go down to a lower time frame. What do we look for? Well, buy side got taken on the higher time frame. We have our higher time frame confluence. Now what do we want to look for? Look for an inversion for value gap as your entry. And this is a beautiful flush down. Same thing goes over here. What do we see? An obvious high in the market. Mark it out as a buy side liquidity. Let's jump down to the 1 minute time frame. Let's see how price is looking here. Well, perfect. You have a manipulation leg. You have a market structure shift right at these lows. And you have an inversion for value gap. Well, guys, this is literally a beautiful entry. You can literally target this down all the way down to these lows. Guys, buy side, sell side are extremely important in the market, and they can help you so much for catching reversals. Like, it's literally insane. Because think about it. Why is buy side so strong? Well, everyone that wanted to get into a position over here, where are they going to put their stop loss? At the previous high. And say they're targeting for like Narnia all the way down here. They never actually got filled on their TP. What's going to happen? Price is going to push up, sweeps out all the liquidity in the market to then have the rejection lower. So guys, that is literally a beautiful example of what buy side, sell side actually is. And there's the flush down. Now, another reason why buy side, sell side are actually so important is because institutions actually use it to their advantage. People that are entering, well, not people, institutions that are entering with billions of dollars, they can't just enter anywhere in the market because they have so much money that they're just going to flood the stock down. It's going to skyrocket and they're going to destroy the stock. So what they do is they wait till levels like this get taken in the market, obvious highs. And since they know there's a lot of liquidity in this area, they use it as a cushion to actually enter. Once they use it as a cushion, that means that there is going to be price that's going to be stopping it from actually skyrocketing up. So in that case, they can actually enter either a long or short position, and they're going to get the best fill on their actual price. Now, the best times to actually enter buy side and sell side, I don't know how many times I've said that in this video. Oh my God. Anyways, buy side, sell side, always enter them at session highs. So S&D profile by TFO is honestly a beautiful indicator, and it honestly helps a lot. You can mark out London session, Asia session, and New York session. So for example, previous New York session, what do? We marked it out as a buy side liquidity. What happens? Beautiful flush down. Very nice. What do we see? We have an Asia session going into London session. What do? Mark it out as a sell side. What happens? We have a beautiful rejection higher. Vice versa. Asia session to London session. Sell side liquidity, we have a flush higher. Guys, new London session to New York session, buy side liquidity, have a flush lower. I can do this all day. Like, this just goes to show session times are very important. And of course, New York session is going to be the highest liquidity. So if you do want to be in and out of stocks very quick, New York session, my God, New York session is the best time to trade. London session, a little less volatility, but it's very strong for marking out zones like this. Buy side liquidity, respected, perfect, flush down. So guys, that is going to be the end of the video. I hope you enjoyed it. I hope it made sense. I hope you understand how liquidity works now. And just before that, I also forgot, I have to show you my strategy. Just before I end off the video, this is my strategy. So we have a fair value gap right at these highs. I'll just group them together because it kind of comes up to the same thing. On the 1 hour time frame, then as well on the 1 hour time frame, look for a buy side liquidity. So buy side got taken. Now let's jump down to a 2 minute time frame, or maybe a 1 minute looks better. 1 minute time frame looks much better. What do we see over here? We have a manipulation leg. Let's mark that out. Once we have that manipulation leg, now we're simply just looking for a inversion for value gap that gets respected. So in this case, we're waiting. That is our inversion for value gap. If you want to be on the more safer side, you can wait for this inversion to get taken. In this case, let's wait for it. Second, it gets broken. Standard deviation from the high, so the inversion for value gap break. Well, yeah, break. And standard deviation, we're going to be targeting for -1s and -2s. And market structure shift is going to be our break even. So let's see how price is going to play out. We have that retest, and overall that -2 does get slapped right in the face. This is such a beautiful strategy. Oh my God. Anyways, now this is the end of the video. Leave a like, subscribe, let me know in the comments what you think. And if you want to learn one-on-one with me in my mentorship, I have a free trial. So go check that out. And yeah, I hope you have a beautiful rest of your day. Peace.